Good evening, everybody, and welcome to another edition of Live Market Analysis. It is a pleasure to be with you as we chat markets on Mondays, as we always do. Fair bit going on, actually, in terms of both US markets, a couple of very interesting candles I want to talk to you about, and of course the Aussie market, which is throwing off, let's say, some far from ideal market breadth, but we'll talk about that and more after the disclaimer, which says that everything we're going to discuss is general in nature, has not taken into account your personal financial circumstances, objectives or particular needs. So before acting upon any of this, you should consider it carefully or seek the advice of the professional to determine its appropriateness to you. As always, remember that trading and investing is risky. You will endure losses at some stage. Ultimately, it's you and not I who's responsible for the stuff that you do. The agenda for this evening is to answer your requests. So I guess do the analysis, or help you do the analysis, empower you to do the analysis, can I say. Or it could be anything to do with the 3 M's of trading: the methodology, the money management, or the mindset, stocks, bonds, crypto, indices, you name it. If I can get a chart on it, I'll do some analysis for you. Let us head over while those requests are beginning to come through, and we'll kick off with our portfolio management model, which always starts with the Nasdaq over here. And the two very interesting candles I was talking about, those last two there, so Thursday and Friday, definite supply side showings, quite credible actually. Size, reasonable size in comparison to the last 10, 20, last month or so. Closing near lows, occurring at a point of supply, or occurring where we'd expect there to be supply at a defined point of supply there at 24020, which happens to be the all-time high. So I think the message there is credible supply, but occurring at a point we'd expect it. So not a surprise. It could be a lot worse. It could be that one. I mean, that was a trading session that made an all-time high on the same day that we had a huge black candle. So we know we're going to get supply. This is the message. We know we're going to get supply around here. It could be a lot worse. Could be like that, and it's not. So I think that's encouraging. But this run was so powerful, it wouldn't surprise me if we saw a modest pullback to the light green ribbon, and it wouldn't surprise me if it kept going either. And I'm not trying to sit on the fence at all. It's just the nature of a strong bull market. It can't go up in a straight line. We've got a credible showing of supply at an expected level. Let's not all get overly excited about what that could lead to, which is a fairly mild, probably pullback in a strong long-term uptrend, and then we'll deal with the candles as we see them. In conclusion, therefore, that's where we need to get to, is what do we do with our portfolio management model? And the answer is nothing. I'm FRP. I've been FRP. Actually, on this one, haven't changed. It's been unwavering FRP. Oh, I'm pretty sure that candle we would have gone to and go check the go check the tapes, right? But you know just as well as I do what the system is. We went back to 2/3 on that day. FRP on that day. We're just looking for when we're getting confirmation that this area now is dynamic demand. That day there, I wonder if that was the day. And then we haven't had a reason not to be FRP since then. My point there is, just let it be simple. Just let it be simple. Not that simple here, unfortunately. The old tin pot couldn't really get going with the Nasdaq, unfortunately, and I think part of that was to do with that US-China trade deal, of course, because by definition, if the US and China get closer together, it pulls China and Australia and China and the US just that little bit further apart. So it was a failure to fire. I think it's been a mild pullback, and today's candle hopefully is consistent with the demand side control, which I expect / hope is still here. And it's coming in again at a level that we'd expect, 8809-43, which is that little trough there and that trough there. Good downward pointing shadow. So let's give this one the benefit of the doubt as much as we can, because we are, this is very clearly here. Lower peaks, lower troughs. We have closed beneath the short-term trend ribbon. The short-term trend ribbon is neutralised. and we've had a pretty decisive candle to cause that. And that's the reason why on that day, I went to 2/3 RP on this one. And I think that's the right place to be. You probably find a bunch of your trades got stopped out anyway, or you took risk off the table to pull you back to 2/3 before I even made that decision. Okay, full risk position on the Nasdaq, 2/3 risk position on the XJO. Is there anything out there that could push us off? Are there any red flags? Let's head over to the Russell 2000, and it doesn't look like it. I mean, that all looks pretty orderly there. Could look better, but it could look a lot worse. It's still trading with a short-term uptrend ribbon. It's still up above that uptrend ribbon. In fact, the higher peaks and one lower trough there, but largely higher troughs. Heading over to the European markets now, a little bit of a pullback there. Interesting to see. Well, we've had 2 days of pullback on the Nasdaq, haven't we? And a few more everywhere else. The DAX, not fantastic, but not a red flag. Not a red flag. That is incredibly strong, and it's a little bit disappointing to see that one so strong, because ordinarily we actually move in a very similar fashion to the FTSE, because they've got some really big banks and financial stocks and some big mining stocks as well. We're actually very similar markets. And again, I think that US-China deal hurt us a bit, relatively speaking. Spain is fine. Looking for red flags, I'm not finding them. Hang Seng has actually moved into an equilibrium phase there. The Nikkei is just gangbusters, isn't it? That's, again, I keep saying it's probably the most obvious trade of the decade. Nifty 50, okay. Shanghai Composite still very much intact, and that's okay too. So no red flags. Let's head over to base metals, and we'll get the line chart going. I think that's fine too. I think that looks pretty good there on aluminium. A little bit of a pullback on copper, nothing too sinister. Iron ore is, as I have said many times, watch this space. I think iron ore could do interesting things, coming seasonally into a very strong period of the year for it. Nickel, flatline. Lead, flatline, maybe getting better. Tin is fine, and zinc is still fine. So nothing really terrible going on there. And having a look at lithium carbonate was going very well until we found supply. That famous phrase, isn't it, that can happen when you're moving along nicely. And hopefully it's not a big whack of supply. Unfortunately, sometimes it is, as we've seen with some of those critical minerals and lithium stocks. It's just A-shaped reversals. This one's not quite A-shaped yet, but that's a decent candle there. Today's candle also decent, back up to the upside, but I can't say that it's closed above the balance point. I don't think it has. So a good bounce, but that black candle, supply side candle, I think is still now dominant in the last few candles. And again, pull back to the trend ribbons. We'll see how we go from there. I think that's the theme, isn't it? Okay, let's head over to the trading view screen, and we'll finish our whip around the ground, starting with silver. And I might head over here, and we'll get the chart watch levels going. So last time we checked, I suspect 1, 2, 3, 4, 5 candles we were trying to hold the short-term uptrend ribbon. If you read chart watch during the week, you saw that this candle occurred, which then allowed me to deduce that that phase of the pullback is over, and now we are just waiting to see what happens roughly halfway in between 45.51 and 53.77. And if we can get above that halfway point, that balance point, then it's looking good to go back up and challenge those highs. If it fails around or beneath that balance point with a, not sure why that's not showing. Normally I'm in the bottom corner and I can't see why it's not there, but which is frustrating because I haven't actually changed anything. You see, I don't want to create a new one there either. Oh gosh, whatever. This OBS is starting to be a little bit more trouble than it's worth, I think. And even that's not showing. Oh, there's something going. I don't know if you can see that in the background. Something weird is happening there. Oh well, you can hear me and you can see the chart. That's all we need. As I was saying, the candles there will tell all. If we get the supply side candles, upward pointing shadows, black bodies in this area, then the silver run could be over for a while. Looking at a couple of the other base metals, pardon me, we're almost seeing that already here. Hardly a rally into those highs, and maybe even there on palladium. So that's interesting. And gold, yeah, printing a little peak if today's candle holds with a lower high, a lower low, a little peak in there. So I wouldn't say they're the rip-roaring bull trends that they were prior to us finding supply. There's that phrase that's going to probably the theme of the day, in fact, as we get through your charts. This idea of on the way up, the demand side, they haven't pegged anything in their mind apart from round numbers. $50 was a place to look at, certainly. But the sky's the limit. Anything can happen. The supply side, they're holding on for anything as well. Like they in their minds, anything can happen. They've got huge expectations of what they could receive. And then a big fund manager comes in, or a few fund managers come in, and they take some profits into the rapid fervour that was there. And now the demand side has pegged 53.77. They can see that level now as a place where they were caught out before. It starts to play on their minds as a place where if it gets back up there, I should get out. People got caught in at that level. The supply side now aren't thinking about getting infinity. They're thinking about, well, 53.77 is probably fine. I should have got out there last time. I knew I should have, and if it gets back up there, I'll do it next time. So this idea of finding supply, it's a really powerful force, particularly in those exponential uptrends. Looking at copper, getting better. It still looks okay. Iron ore, we looked at those on the LME. It looks fine. It's still edging towards the top of that range. Uranium, I'll give you a line chart on that. Looks okay. Looks fine. And heading to the crude oil products there, they're roughly stuck in the middle. But we don't have really anything looking so terrible, do we? So that's helpful for commodity stocks anyway. Okay, look at the bond market. Actually, before I head over here, I know I've labelled this chart thoroughly uninteresting in the past, but it's actually starting to get interesting, and not interesting in a good way, I think, if you're a Bitcoin bull, but that's more than flirting, I think, with the long-term trend ribbon, which has neutralised. And yeah, if we start to close beneath it, I think there's some problems here for Bitcoin, particularly if we end up doing something along the lines of, say, a move like this, followed by a move back up and then a move back down again. I think that would be a bit of concern. Ethereum also looking the same, and you're seeing a little bit of that bouncing ball pattern. When you bounce a ball off a tabletop, it bounces a little bit lower each time. The tabletop is supporting it, and then you just run out of table. And then once you don't have that support of the table, you can fall a lot quicker. So a couple of interesting crypto takes there. We said we're going to finish with bonds. Let's do that there. Having a look at the Aussie 2 years, and we're seeing that shoot up on the back of the CPI data last week, which came in hotter than the market was expecting, hotter than the RBA ideally would like, and that means the market has factored out. They factored out a full rate cut into the distant future, so 3.44% is the lowest expectation of rates out to April 2027, if I'm not mistaken, and I'm pretty sure I'm not. So think about that. We're at the end of 2025, so really for the next 18 months, we can't see a full rate cut. Because a full rate cut would be that rate 3.44 being at 3.35 or less. So maybe I can show it to you. Maybe I can show it to you. Yeah, well, there you can. I can. RBA rate tracker, and we can see there out to April 2027, 3.44%. And nowhere does it get below 3.35 at all anymore. And that's changed substantially from even just a week ago before the CPI data. There was a rate cut and even a little bit more available. As per the market's thinking, that's not there anymore. So that's what the bonds have done. And actually, to be fair, the stocks, and I'm going to say it probably even coincided with that day, did it not? So there's another factor there. So you've had the double whammy, I think, of the US-China trade deal, and then that factoring out of the rate cut. And stocks, it's always going to be hard for stocks to shoot the lights out in such an environment, 10-year yields heading up. So maybe I've been a bit hard on the old tin pot. Nothing special going on there. The Japanese yields and US yields have risen despite the rate cut, and that often confuses people. Carl, didn't they just cut rates and yet long-term rates are heading up? Yes, because, again, another hawkish cut from the Federal Reserve, where they're basically hinting that there are fewer cuts than the market was expecting to come. Not that there won't be one or maybe two more, but so the market was factoring in more than that, and we see the market adjust. So that's not a bad thing, actually, because a precipitous fall here, I've told you, is one of the things we need to be careful of, and the fact that it's actually headed back up. It didn't kill stocks. How about that? So some of the stuff I say here, ladies and gentlemen, does make sense from time to time. We saw a 3.4% to 3.6%, 20 basis point move, factoring out of a whole rate cut, and yet stocks didn't go down because it's not such a bad thing for that to happen at this time. And those are those just little quirks of economics that where the rules don't always hold true. It really depends on the circumstance. Okay, let's get into your offline requests. Just checking your online comments, and nothing has broken, so that's good. And Liana has one for us to start off with. INR, which is a lithium stock. They've got a project in the USA, which of course is irrelevant to me, but if you're interested, they were a beneficiary, I want to say, on this day here of, maybe that was the announcement, or maybe I think it was before that, maybe even there, the US government took an equity stake in the Lithium America Corp's Thacker Pass project. And because these guys also have a project in the US, that's part of the reason why they got going. And then the broader critical minerals just melt up, helped egg them along. And it was one which I'm not sure, honestly, when it went in the ChartWatch scans list. I want to say there because that's the most obvious point for a turnaround setup for me, as you would agree. And then maybe it went in on that day. I don't know. I can't remember. None of those candles are shooting the lights out because there's shadows and the like, and they're black. So if you did get in, let's say hypothetically speaking, between sort of 15, 16 and 17 cents, where would you be right now, hypothetically speaking? And Liana's specific question was about she's actually looking for a suitable entry point, quote unquote. So I guess she's not in it yet. And for me right now, no, it's very neutral, and we can see that straight away. Don't have to think too hard about it. We've got take these dashes. We've got a short-term neutral trend and a long-term neutral trend. So straight away we've got some problems. The price action, well, let's draw that in. What does that look like? And we'll go on the way up. So we'll start from here. Lower high, lower low. Higher high, higher low. Nothing. So on this day we can't draw a peak in, but on this day we can. Lower high, lower low. In fact, this day's irrelevant. Forget it's there. It doesn't exist inside days. When we're doing our peaks and troughs, they don't exist. So lower high, lower low, lower high, lower low. So here to here. High, 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 low. And come down here. I wonder if you spotted that one. That's a peak and trough, as per my method. And technically these aren't, because we don't make a high high and a high low. We make a high low, but not a high high. We've got equal highs here. So this is not a trough. So we just go down to here, and then we get a little bit of price action here. And that's what we've got. Now, we don't know where this next trough is going to form. Could be anywhere. So we don't need to draw it in. So first part of the equation are our trend ribbons. And it should really just be a checklist for you by now, isn't it? And it's something I know you're probably doing mentally, but what's the harm? What's the harm if you start? I was going to say, what's the harm if you're starting out to actually write down these boxes and actually check them with an old-fashioned lead pencil? No harm. What's the harm if you know it in doing it? Trends, neutral, neutral. Price action, mixed at best. Maybe those peaks are the same. I couldn't be bothered even measuring them, because it really doesn't matter, does it? Maybe these troughs are about the same. Prior to that, though, we're in a clear-cut downtrend. So we've got a cross mark, don't we? On the trends, we've got a cross mark on the price action, and the candles, upward pointing shadows, black bodies, they're both traits of supply side control, aren't they? So we've gone cross there. So without any crosses, without any ticks. We've got all crosses, haven't we? I think we've answered the question on where so the question is a suitable entry point. And I don't know. I don't know where the suitable entry point is going to be. This could be a suitable entry point if next week the price is up here. But I don't know that. All I know is that everything, I shouldn't say everything, the trends are neutral, right? So they're equilibrium. But there isn't anything pointing to demand side control. That's a more accurate way to put it. And with nothing pointing to demand side control, let me say that there's no suitable entry point now. Okay, now that'll change, Liana. So tomorrow we'll get a candle, and it could be a nice white candle. And I would have to do the same work that I just did. Of course, I won't be here tomorrow to help you out. So you'll have to do the same work. And that's okay. Like I said, checklist. Checklists are wonderful things. Okay, we get a big white candle like that. I venture to say we'll still be neutral on both trends. It won't be enough to change the trends. It will be enough to change price action. It'll actually move us back to high peaks and high troughs. So that'll be a little tick there. It's a little tick because it's only a little move, isn't it? But it's still a tick. But if we're comparing the size of ticks, isn't it? I mean, that's a smaller tick than something that is moving in nice price action, like through here, for example. And obviously that candle will go a long way to righting that ship as well. So when we get enough ticks is the answer to your question, Leona. Your question is, I'm looking for a suitable entry point. And my answer to you is, when you get enough ticks in those boxes, that's when you'll have your suitable entry point. And it's just not now, not yet. Okay, let's go to Tony. Tony's got RZI. And, it's just a process, isn't it? It's just the process. Last time we looked at it was here, and we said MRP, but we don't use MRP anymore. We go equals R, which is just maintain it if you've got it, or we said plus 1/3 if you don't, and we obviously were looking at a demand side candle at the time. Looks like I got that one right. Looks like I got that one wrong. 50-50. We have moved through the point of supply. Well, there was a major point of supply. So, kudos to Raiz Invest, actually in the environment that we're in. This is substantial outperformance of the benchmark. So well done, Raiz. And the question that Tony has is, Tony actually said, you got the analysis right last time, well done. Where's the next point of supply? Okay, well, for that, all we need to do is click on the weekly chart. That's all I like to do. And I'm not going here to do analysis. Remember, I'm consistent with my daily chart. If I was a longer term trader, I would look at the weekly and I wouldn't go anywhere else. But I'm going here to check if there are any major points of supply. And I don't think there are any that look really sinister. And I'm not even allowed to scroll back, because anything further back than that is ancient history for me on the daily chart. And what I'm looking for is major peaks. So, areas that look like that. No, I can't see those. Or areas that look like this, right? We've fallen through, and then this area, this trough, because we know that a point of demand, that didn't work. Maybe try that again. A point of demand. That was a point of demand. Once consumed, tends to, depending on the price action when we get there, act as a point of supply going forward. Okay. Points of supply are pretty straightforward. They tend to act as points of supply. So if I look in here, right, if I go back from here and then look all the way back here, what do I see? And I'm trying to get that nice and horizontal. Okay, well, we've got a level here. This level here, relevant? Yeah, I think so. But if we're not through it, we're very close to through it, and we've got a nice white candle. I know we've got today's weekly candle is all of one candle old. But assuming we close here or hereabouts by the end of the week, then I would say this is as good as consumed. There's maybe a little trough in here, but I think it's the same as this, isn't it? In fact, I don't think. I'm quite sure it's the same as that. We can get rid of that one. Let's get rid of that one. Let's get rid of that one. And what I'm talking about is really, it's funny how, I do theory, and then we look in practice, and it is exactly there. That is all inside, same side. So we go here, and that actually harks back to the other analysis we did, why there are no peaks and troughs in there. That's nice too. And what do you notice? Like, there you go. I can't make this stuff up. The point of supply, I'm just going to copy and paste this now as I can. The point of supply there, but the point of demand turned out to be the point of supply. How about that? So that means that's not really an issue because we've already accounted for it, which means this is the next one. And I think that's far enough away not to be anything for us to worry about. We've got to get through $1 first, so let's worry about that before that. And I think we're fine. So to answer your question, Tony, where's the next point of supply? That might be an issue. We don't know. It's like we think it will be. And until we get there and see the price action, we're not going to know. And I would say this point of supply here was largely to do with this point of supply. And we often find that when we test that point of supply the first time, we're actually more prone to fail than we are to get through because there's a lot of supply there. That's the whole point of the point of supply. But the next time we get through it, we're working through that supply, and then we've eliminated the supply. It's like, bashing up against the brick wall, and each time you bash up against it, it weakens, a bit of mortar falls out, the bricks get looser, until finally you can push through and get to the other side. So Tony, the answer to your question, I'll give you a number, is, what's that high there? 115. 115. In the meantime, where we do our analysis, actually great little segue from the last one where we couldn't tick any boxes, could we? Couldn't tick a single box. Let's do the analysis here. I was going to say, do you mind? I don't think you mind, do you, if I delete all studies? I don't need to prove anything to anybody in this presentation to say that, oh, look, I got it right last time. Like, I don't need to do that anymore. So all we're here to do is to learn the system and do the analysis. So let's do that. And I have missed a step here because I really should be talking about the trend ribbons first. But we can see they're both green, can't we? And the price action is now drawn in. That's handy too. The price action is rising peaks and rising troughs. What have we done? Tick, tick, right? And within the tick of the trends, we've got two ticks because we've got double greens. And the price action is very much getting ticked. And look, I know we've had a little bit of congestion here. And what have I said about congestion, ladies and gentlemen? And hopefully what I've said is repeating in your brain, because I've said to you that it's okay to get a bit of congestion at places where we would expect to see congestion at old points of supply. All right, we'd be more surprised if we didn't get some compression of the price action there. So, and I think what's neat about this is if we're holding a stock, we're more inclined to give it a bit more room, aren't we? Because we're going, oh, well, this of course we're going to see that. But it actually dealt with it really well because we can look at the candles, and that's the final tick here, isn't it? The candles are very good. So I can't fault this one. Actually, it looks very strong. I don't know what's going to happen next, and that is me covering my backside because I don't know what's going to happen next. But certainly what I can say, based upon what I see, and my checkboxes, we've got plus R here. Obviously, if you have it, then you would be maintaining the risk you have if you don't need to add any more risk to it. Okay, let's go to your online requests. And Colin has 360, which we've obviously got some analysis in the past. And I reckon we talked about this last week. And we look at what I drew on the screen there. As I said, I want to see a dink. I want to see a dink. Now, that's a very fancy term, isn't it, for the supply side demonstrating what it's got and the demand side demonstrating what it's got. So up to this point through here, we've had, let me get rid of that, and I'm going to get rid of the dink so we can start fresh. Up until this point here, we had actually some really solid demand side control, and I want to say, I can check for you because if today is I always get mixed up around the end of the month. So let's just count back candles. That'll be Friday, Thursday, Wednesday, Tuesday. So that's Monday. So we only had white candles, didn't we? And I said to you, look, I just want to see it. I just want to see a little dink. I'm not sure yet. We're interacting with the short-term trend ribbon. It could be a point of supply, of dynamic supply. So I don't want to mess with it. Like, I'm going to respect my ribbons. Have my ribbons done me any wrong? And if my ribbons haven't done me any wrong, why would I not continue to pay it respect? So respect the ribbon, see if there's supply there. I can't, why? Why is there all this demand at the ribbons and then why is this? I don't know, ladies and gentlemen. I wouldn't have a bloody clue. But let us thank the maker there is, right? And what do we get? We got hardly anything. I mean, look what we got in all of this. And the Aussie market's been a bit rubbish, right? And that's all we got was that, and that. And even that's not that bad. And then this is a good candle. And I think I put it in. I think I put it in on this day. I didn't run it as a feature, but I'm pretty sure I ran it on Friday's close for this morning. And it's going in tomorrow as a feature. So if we go to Store 2, where I have my feature charts, 360 is the first one. You can see right there. So this is a feature for tomorrow. So I'm being true to my word here in terms of the analysis. I mean, the analysis we do here is what comes out in ChartWatch, isn't it? So it's done everything I required of it. I wanted to know how much supply is in the system from this point of supply. And I really still don't have my answer yet, but I have got a bit of an interim answer, haven't I? Like, how did the supply side respond to this rally? With not a lot of ammunition, and how did the demand side respond to that? That first real test they've had in this bounce, and I think they responded pretty well. Now, this thing is nowhere near out of the woods yet, because we still have this point of supply, and it is a major point of supply. And it's not just me saying, oh, that looks like a bit of a major point of supply because it went down from there. No, we have a definition for this that I have taught you. I have taught you this definition, and it is objective, not subjective. And this is how we know a particular point of supply goes from just a regular one to a major point of supply. So we will have a set of higher peaks and higher troughs. Hopefully you can see that one there is nothing, right? It's inside this day here. So we keep going, go to here, 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 here. So we have a set of higher peaks and higher troughs on the left of the point of supply, and a set of lower peaks and lower troughs on the right-hand side. Right. So let us take a different point of supply. So let's take this one, for example. Is that a major point of supply? And I know you're shaking your head. You say, no, Cole, that's not a major point of supply, because whilst it has a set of rising peaks and rising troughs on its left, it does not have a set of falling peaks and falling troughs on its right. Okay, it's just got a peak and a trough. So that one's a point of supply. Yes, it is, and it's relevant for that candle there. And then that candle takes it out, and then it's really not relevant anymore. I mean, that point of supply will really have no major relevance going forward. But this one is far more relevant. Set of peaks and troughs rising here, set of peaks and troughs rising there. And then I think about the Alps or something. I mean, you've got small peaks, and then you've got the really big ones. And this is the really big ones are the ones that matter. So, yes, we would expect there to be some latent supply lurking in the system up there. We won't know until we get there. We see what candles are there. But given what's happened here, that this short-term uptrend ribbon is uptrend now, is, I believe, acting as a zone of dynamic demand because, well, we pulled back to it, we held it. We've got a long-term uptrend, so we're ticking boxes, aren't we? We're just ticking boxes again. Price action is rising peaks and rising troughs again. If you're not sure, let me prove that to you by going and looking. Oh, I don't think that one is, but again, unless I get out my ruler and see the highs, the exact points, and we don't need to be so pedantic with this, but that's where we are. So we're rising peaks and rising troughs again, double greens, tick, 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 and the candles are clearly predominantly demand side in nature. Ladies and gentlemen, that's all you really have to do. The final flourish, I mean, that gets us the setup. That's a setup. The final flourish is that reward to risk, right? And this is not part of that methodology. It's part of the money management side of things, where we should be trying to make more on trades than we will limit ourselves to losing. And the question is, well, why would you get into a trade where you stand to make less than what you're risking? This is actually pretty neat, and this is the benefit of the Dink, and I know I've explained this to you before, is the benefit of waiting for that Dink is you actually get a tighter, not a stop loss because we don't use them, but you get a tighter point of demand to peg at least your first exit beneath, right? So this is a point of demand as well, but this is not just any point of demand here, right? It's not just any point of demand. This is what we'd call a major point of demand in the same way that we would call this a major point of supply, okay? Now, if we had not waited for the Dink, it's going to pain me to do this, to dismantle it. If we'd not waited for the Dink and we were just here, you can see now that our reward to risk changes significantly, because where do we peg our last point of demand is here. We've got a long way to go before we can clearly see demand's been consumed and we've got problems. We need to reduce our risk. And that actually looks to me as I'd say that's still 1-to-1, isn't it? So we'd still be able to do it, but it's only just 1-to-1. Yet if we wait for this Dink, and I'm sure I put it in that day, but certainly it's in today. We're going to get in a little bit higher if it's today or the open tomorrow, or if you got in today at the end of today's trade, right, last 10-15 minutes. Happy for you to trade then. But what it does is it really changes the reward to risk. Yes, we're getting a little bit higher, but the reward to risk is substantially better. Okay, we're easily getting our 1-to-1 here. So that Dink is not just a silly little flippant term that I use from time to time because I can't think of a better way to describe it. And if you've got a better term, let me know. But that's why we do it. So yes, happy with that one. Obviously, to continue to write on the screen. Plus R if you're looking for risk. And this is your favourite one, or if you've got it, maintaining risk also. I did want to steal your thunder by showing you the rest of them, so I won't go through them. I know I do that sometimes, and if we get to the end and I haven't done it, then remind me and I will if you want me to. But let's talk about your requests rather than looking at like looking at the teacher's answers sort of thing. Okay, we're going to go to Roscoe, BRE. Let's go to BRE. And I think it still looks pretty darn good, doesn't it, Roscoe? Nothing too untoward here. Let's go zoom normal. We really should get back to our default zoom. It brings in more price action as well, so we can see if there are any nasty bits out the side. And I don't think there is, because from memory, this is pretty new. So that's it. That's all blue sky. So just in terms of ticking boxes, double greens, the price action is still rising peaks and rising troughs. There's nothing in here to change that. And the candles are still predominantly wide. I know there's a couple of black ones creeping in. Why are they creeping in? Around $6. It's a bit of a round number. It's not one that would typically worry me. Notice where it bounced off is 5 now, isn't it? 5. I think there would have been many people that bought it in the float. I don't know what the float price was. I can only guess. Maybe $1.50 or something. Maybe $5 was their level. Certainly 3. It's starting to make 6 make a little bit more sense. If it was $1.50, and correct me if I'm wrong, I'm just purely guessing from roughly where it started. But it would make 3 a natural point of supply. Okay, so 3 would be a natural balance point for this one. We'd expect there to be a lot of trading there. And then 6 would be just another obvious one, but 450 might be another obvious one as well. So are there any sort of areas of congestion around there? So long story short, I don't think there's anything unusual going on here. I think we're just in the shadow of a bit of a point of supply there, and it's only a regular one, and that's what today's candle is. So for me, happy to maintain risk, and if I see another demand side candle, so next demand side candle, it's not today obviously, but I think I did run it on Friday's candle for this morning, didn't I? If we saw that, then we'd go plus R. So it looks good. I don't know what's going to happen next, I know. I keep saying it, but I don't. But from what I can see, I think we're okay there. Let's go to, I think, answered your question about that one, Roscoe. Let's go to John, who's got, would you please advise what event 9S? John, you're going to have to help me on that one. Would you please advise what event 9s or 9S? I don't know what that means. Maybe he's got another post here. Would you please advise what events cause the ribbons to change colour? Okay. No, sorry. Can't tell you that. That's trade secret. So the answer is no. How about that? But the good news is you've got my ribbons. So who cares why they change colour? Yep, a few people okay with that too. Yep, let's keep going. Hi Carl, thoughts on the following USA stocks? We'll do those when we get to USA stocks. Nicholas saying, hi Carl, bit of a boring ETF, but thoughts on CLDD? Okay, I'm curious now because what does boring mean? It is a bit boring. Yes, that is a little bit boring, but it's starting to look better. Cloud computing. Look, Nicola, what about this one? Tell me if you got on this one, because that's been in Chart Watch many, many times. And I feel that that's a similar one. And there's also an AI one, isn't there? I can't remember what. There's a couple of AI ones that have done really well. So, but it looks CLDD, and I mentioned that because they're all technology sort of ETFs. It looks okay. So we can check boxes, and this is a good exercise in compare and contrast, isn't it? So what's this we want? Yes, we've got double green, so tick, tick, but we want a little bit of steepness there. And we can forego steepness if we have got the other stuff like strong price action. So strong motive phases. What's the strong motive phase? That's a motive phase. That's a stagnation or pullback phase, motive phase. So we know what good price action is. And predominance of white candles as well. Harder to get on an ETF because you have market makers. So particularly if it's a bit thin, what does that mean, a bit thin? Well, for example, on a day like this where we trade 1,000 shares on a $14 ETF, you traded $14,000. That's literally one person buying some of this for this super fund, isn't it? And you can see. So it's more than a bit of liquid. And what occurs there is one trade crosses the spread. And the market maker's probably got a pretty wide spread on this. And this is how BetaShares makes money. I don't know if you realise that. This is how they make money. They're on both sides of the spread. So when you buy and then Nancy sells, BetaShares just made literally, and you like two people just trade 1,000 shares, one buys, one sells. They just literally made that spread. So they're happy. But it can mean that their spread is the candle sometimes. Trades in the morning, somebody bought, trades in the afternoon, somebody sold, and you've got a black candle. Or it trades in the morning, somebody sold, and then somebody bought, you get a white candle. So at the end of the day, the ETF is a representation of the stocks in the ETF. So it would make more sense to do the technical analysis on some of these cloud computing stocks if you can tell me what they are. I would love to go and do that, even if they're in America. And maybe homework, Nicola, is get on just while we're talking now, while I'm doing some of the other ones, jump onto this BetaShares Cloud Computing information page and see what their top 10 holdings are. I'm happy to look at those. And I think that'll be far more instructional for you understanding what this might do than looking at this chart, which is, as you say, a bit boring. It does have rising peaks and rising troughs if I squint, but maybe even that one's lower now that I've said it. And there's no point looking at candles on this one. I think it's worth discussing these things about ETFs because more people are trading them more and more, and we're going to want to do technical analysis on them when actually probably we shouldn't. Okay, let's go to Michael. So Nicola, you've got a bit of homework there for us tonight. Michael's got 360, so we've discussed that one. He's also got TUA as a potential turnaround setup. And this is more of a continuation turnaround, isn't it? So we've got pure turnaround setups. They're the ones that big long downtrends are trying to turn up, a bit like that Ioneer. Then we've got continuations, double greens, like Raiz. And this one's in between, where it's pulling back to the long-term trend ribbon, long-term uptrend ribbon, I should say. And it's all the same. It's all very much the same stuff, really. Ticking boxes. We don't have a short-term uptrend yet, but I'm okay with that if the price action, as I said, is good. I mean, we can make up for deficiencies if other stuff is suitably strong. I'm okay with that. I'm happy with that because I think this is going to turn up fairly soon. I know I can't tell the future, but everything is pointing that way at this stage. The more often than not it would turn up. The candles, I think, are good now. Yes, I mean, this is the key one. Today's not terrible, again. I don't think this is the most liquid stock either. So happy with it. I don't mind. Today's candle could have closed better, and that would be the only thing preventing me from buying it at, say, tomorrow's open, or it would have prevented me from buying it at, say, 10 to 4 this afternoon, is that candle wouldn't have been strong enough. But I can say, if you've got it, the good news is now we're quite happy that its equals are. I think that's a sure thing for us as far as sure things go. We're happy to say that. And then we can go plus R, I'm showing plus R, on the basis of the next demand side candle, whenever that occurs. Okay, let's go to, and we should also mention reward to risk here because we do have a major point of supply, don't we? And our relevant risk levels are here. And if you really wanted to try and make it fit, not that I think you'll have any problem, then you could use that one as well. That's worth mentioning. Okay, let's go to MAD. This one is for Neil. And a disappointing pullback, isn't it? I'm just looking at that now. I'm thinking this is one of those that it's gone A-shaped. And that's when my model really struggles on those A-shaped reversals, because you're just not given anything that you can really say, yep, that's where I really need to manage my risk. For example, that day there, well, certainly that day there is adding risk. That day there is happily adding risk. Actually, there's a reason why we would not be happily adding risk on that day. Why would we not be allowed to add risk on that day? And in fact, now it would have been in ChartWatch scans. Don't get me wrong, 100% that would have been as a feature chart, in fact, on that day in ChartWatch scans. But we're not in ChartWatch scans here, we're on Monday nights. So Monday nights we go a step further. We do an extra step that the ChartWatch scans people don't get, because I haven't taught it to them, because I just, I can't teach the thousands and thousands of people on Market Index the stuff that I can show you guys on a Monday night in this small group. So we wouldn't actually be allowed to buy on that day. We're all, I think we understand why. Do I need to point it out, or has somebody written it down the bottom? They haven't. Obviously $10. Okay. So I just got it. So $10, and this is just about reward to risk. So we feel that $10 is a point of supply in itself. There's no peaks and troughs back there. 100% there won't be. But we imagine that $10 will be a point of supply. Okay, so for us, we have to use that in our reward to risk calculations. And we say, well, that's my upside, because we're going to be taking profits there, right? Compulsory, we must take some risk off the table. I should say I have to. You can do whatever you want. General advice warning, you know what I mean. So if we were looking at, and this is a fantastic setup, would have been the best setup on the day, say even on that day there, if we peg out minus R under that point, and we look up, actually I think we can make it, can't we? I think we can make it on that day, because we can see that we've got about 80 cents worth of downside, we've got about $1 worth of upside. So actually I think on that day would have been the last candle. Absolutely, that day's the last candle we could make this work on a reward to risk basis, because this day we've got two problems. Number one, we're getting closer to 10, and number two, we're getting further away from 8.20, right? So that would have been the last day under that Monday night crew would have been allowed to take it. And that day, it's just happily riding it now. It's just hoping we're going to get there. But we don't get there, do we? And it wasn't on that day that we could tell. On that day, is it fair to say, I don't know how many people are here tonight. There's 31 and I'm 32. 32 pairs of eyes, 64 eyes on that chart, all going, it's a hold on that day, equals R. And that day we've probably, maybe I've lost a couple there, nervous Nellies, but I think most of us are still going, well, that's annoying, but we're still okay. And actually that day is probably one where many of us, I think, are starting to think twice a little bit. Is that fair to say? Thumbs ups or thumbs downs? Whether you would have done anything on that day, I'm not saying you would have, but that's the first day we go, okay, this is going to be a more frustrating pullback than I thought. Yeah, got plenty of thumbs ups there. Would you have done something like that? I don't think you would have. Maybe you would have. I don't know. For me, I don't think I can. I think I still have to show the faith in this damn thing. And that day I'm probably going, well, I'm glad I showed some faith in this. It's just bouncing off the short-term trend ribbon. I know it could have closed better, but that was probably a crappy day in the market because we had several. I think we're still okay. Now I'm starting to lose some faith. And now I'm thinking, and that's all we've got, by the way, I think we're going to take some risk off the table just as a precautionary measure, out of frustration, out of, I don't know, this, why would you do it just out of frustration? Yeah, because I don't like to be frustrated. I want a clear mind. I want to be in a position. I've still got some risk on the table, but if it keeps going down, I want to say, look, at least I got some out. And it's going to help with my mental stability. It's also going to free up some cash to find for, I've got a whole row of decent other uptrends there. And from here, I'll start to get really aggressive too. I mean, I'll start to hold it to a really high account if it continues to print black candles, and I'll get out pretty quickly if I need to. But that's the way I'm thinking. It's like, well, I gave you every chance to do the right thing, and you haven't. Okay, this actually sounds, as I say those words, and my voice is resonating in my skull, I feel like I'm talking to my kids. I gave you every chance to do the right thing, and you haven't. And therefore, here's the penalty, all right? I think we've all been there. So minus R, yeah, like I wish I could do to my kids, but I'm locked in on that trade for probably at least another 10 years each, let's say. Okay, let's keep moving to, we love them, no we do, we love them, we're stuck with them, but we love them. We wouldn't have it any other way. Let's go to Michael's got MP1. Oh, which, what did we say? I think I had this on Wednesday, didn't I? The Wednesday session, I said, I just want to see a nice, a strong demand side candle closing near that point of supply, and I'm happy to go. I don't need to wait for it. I did run it as a regular. I don't think I ran it as a feature on this day. So I ran it chart watch. And if you see it in the regular list, that means plus R. It means happy to go. And it would have made feature if it had closed on the high, and it didn't. But it's in as feature tomorrow. And I'm only saying that because, I think that's the day you could have had some risk. So don't think that I would have waited necessarily all the way to today. But yeah, look, it's exemplary today. I can't fault it. Have a look up at 20. We need to make sure that can work. And I'm happy to use this as a point of demand here. And you might say, Carl, strictly you can't use that because they're actually, that's an inside candle and there's no lower high, lower low. And I get that. But we've also got the short-term trend ribbon here anyway, right? And that is clearly going to act as a point of demand, even if it doesn't meet that strict criteria. We need a little bit of flexibility here, right? But I think we'll make one-to-one there quite easily. So on that basis, plus R, if you are looking to add risk, if you happen to have it, it's obviously an equals R. Let's go to, I'm getting easy ones tonight. I like easy ones. Let's go to CZR. Actually, this is an easy one as well. Because if I'm not mistaken, I reckon I didn't run this. It's in the regular list, I assure you, when you probably already know because you can go to TradingView, everybody. This is something also that not a single person from Market Index can do, only Monday Night Crew can do, is go to those TradingView watch lists and see. You can already see what I've put in for tomorrow, can't you? So it's definitely in the broader list because it's going to tick all of our boxes. And I'm just making sure that we don't have low peaks and low troughs, which we don't, because it's actually very simple through here, and today is giving us that candle there. So that all looks pretty solid to me. Double greens, obviously, predominance of demand side candles. That would be the only thing that I would just question for a very brief period, and then say no. I think today's what swings it back on the side of demand side candles, and it's a very good candle. And I like the volume today as well. I think we are removing, and this is kind of the key to these confirmation days. We want to see some supply removal. We want to see some interaction here, and we can tell through the volume that quite a bit of demand came in today, and it consumed quite a bit of supply in the process, and that's exactly what we need to see happening. So yes, for me, it didn't make feature. Why didn't it make feature? Probably for the same reason that you all saw as soon as the chart appeared on the screen, is just the black candles. And if I can find something without so many black candles, because black candles are just supply and motivated supplies, a bit of volume through there. Why were they all so motivated to supply this thing? I don't know, I don't care, and I don't want to find out next time sort of thing. But having said that, it's doing all the right, it's consuming that supply. Okay, so I'm explaining to you why it didn't make feature, but it certainly deserves plus R. And those features, hey, that's my view on the world. I think we've seen that generally the features, I think they tend to do better than the regulars, but not to say that the regulars don't turn into be features pretty soon anyway. Okay, let's keep moving. ERM for Robert, which is Emmerson Resources, another one that's done quite well, and today didn't do anything, but it can't do something amazing every day. But it still looks very, very good. Let's go to Zoom Normal. Let's go to weekly to see if there's anything out there, and there isn't. So that's good too. And this one's very straightforward, isn't it? Double greens. Price action is not rising peaks and rising troughs. There's a little dink in there, but I don't think it's anything too sinister, do you? I mean, the fact that we overcame it pretty quickly. 30 cents, is that a round number? Not really, but are we surprised that there was a little bit of a pullback? And that's all it was, a little bit of a pullback at 30 cents. It stopped at the short-term trend ribbon, bounced straight off it. Short-term trend ribbon, doing its job, just doing its job. Long-term trend ribbon, doing its job, got pretty close to those two times. So I think we're pretty healthy and pretty happy there. And, you know, look, 20. It's just one of those classic punter stocks, isn't it? 20. That's where I want to get out. 30. What did it do at 10? Did it do anything at 10? Spent some time at 10. I know that's a wonky line. Let me fix that up. But anyway, I don't think we need to labour on that point too much. Plus R on the next demand side candle. Today's not really it, but certainly when you see it, equals R obviously in the meantime. There's absolutely no reason on screen for me to reduce any of my risk. And that's it. Next demand side candle. Thanks for those to Robert. Going to Peter, Bitcoin for a short. Yeah, I don't mind. I think if you're really brave, you could anticipate it and go now, but know what you're getting yourself into. It's higher risk because you're anticipating a break. Technically, we're still equilibrium at worst, up long-term uptrend at best. But yeah, if you want to play that game, if you want to play, knock yourself out. DSV and the TSX will do that on the way back up. Important comment from Matthew. Hi, Carl. It's very rare that we look at US stocks for a case study. Yeah, we can do that. I just want to remind you that somewhere around the 13th of May, 6 months ago, after a good candle took out supply, you suggested Palantir looks like it wants to go to 200, which it reached on Friday's close. Well, that's nice. So just because the individual stocks are higher in cost, if you work in percentages, they can be very profitable. Absolutely, yes. No, please. Oh my gosh. No, in America, and we say this anyway, that price is irrelevant. And no, you cannot look at American stocks, even if it's $1,000. It's totally irrelevant. It just means if you've got a small amount of capital, you have to buy, well, you'll only be able to buy fewer shares. But you never look at American stock and say 200 is expensive or 1,000 is expensive. No. And you should never look at Australian stocks like this thing on screen, which we shouldn't even mention in the same sort of ilk as those big US stocks. That 30 cents is cheap or 10 cents is cheap. It goes the same way. So I totally agree with that comment. GXAI is the AI ETF that I was trying to remember that says Hayden. That's been in a few times. Jason's got, we'll look at Palantir when we get to the US stocks, Matthew. Jason's got APG, which is, I don't know actually, which one's that? They're all in the US, that makes sense. We'll look at those very soon because I don't think we've got that many tonight. I think the late start is keeping a few people away, which is okay. Oh, KO. How about that? That is a monster, and what we really need to do is actually go back to TradingView and have a look at, I'm going to go here, hold on, do something in the background. Let's go to KOSPI, KOSPI, is the South Korea, there you go. So that's what we're trading, ladies and gentlemen. So we think of, there's no point doing technical analysis on ETFs. You've got to do the analysis on the underlying assets. But what a magic market. I would never call that the old tin pot, would I? That is the most golden of golden Le Creuset. Absolutely wonderful. And when we do go back to the ETF, which is the thing we can trade, and I hope you have, because this has been in my scan so many times, and I can tell you how many times. Let's go into my thing, which you can't see, and go IKO. Oh, not that many times, 13 times. Yeah, Excel won't work. Oh, it does work, hooray. I wasn't expecting to work, there you go. So this is, I can type in any ticker code. If you want to see this, let me know. If you don't, that's fine. But I can type in any ticker code there and see how many times it went in. And if I hide myself like that, you can see, there you go. So the first time it went in was in June, 4th of June. And these are features. So it would have gone in many more times, just as regulars. But at 101.08 and the 27th of October, not that long ago, last week, it went in at 146. So that's about 46% return in 4 months, 4.5 months. Not bad. And now it's at 155. So that's a 50% return in about 4 months. So not bad work if you can get it. And several entries, I think, along the way there too. So sure what you need me to add on that one, Oozle, but just to say, he's saying how good is it? I should read comments first. It has appeared many times in my shortlist. There you go, which is where we ended up in the end. Plus R if you are looking for new risk, or equals R if you don't have it. Let's go to Nicola. Top 3 holdings in cloud. Good. We'll look at those when we get to the US ones. So we've got Shopify, Snowball. Is it? If it's not, is it Snowball? And ZS, or I don't know ZS. Zillow? Don't know. Haraju saying 10. Not sure what 10. 10 bucks. 10 bucks. Which was the problem for. Can't remember. What was it the problem for? MP1? No. What was it? 10 bucks. Meta Group. MAT. It was getting close to 10 bucks. Hi Carl, thoughts on GRR as a turnaround? GRR. Yes, as a turnaround. It's going to be very, very slow though. It's just the way Grange Resources does things. It's going to be slow, and it is a long way back. But hey, you never know. Ioneer, I do think, can do well, and I shouldn't even say that because I'm not allowed to prognosticate, but it should be supportive of Grange. Whether you'd go Grange over something like FMG, which I've put in several times over the last few weeks. I think the first time here, I think one there, I think one there, one there, one there, one there. I think I'd go Fortescue over Grange, but I can see what you're going for, what you're looking at there. The only problem I see is a bit like MGX, where that was looking really good, and then what was this like? It was probably a capital raise or something, isn't it? Where they just go, stop, share price has gone up, let's raise some cash because it might never go up again, or it might be back down by next week. And that's what management do in these mining companies. They panic and just raise cash at a huge discount. I can't say that's what happened there. I don't know, but it just feels like that. And somebody could look it up and tell me. And I probably don't care anyway. But I'm disappointed. I should say disappointed, because it was looking very good. So let me say I don't disagree on Grange. I know that's double negative. Let's go to CNQ, which, geez, that's a ripper. Holy moly. And you know by the expression there in my voice, I haven't seen this before. And you can see why I haven't seen it with the turnover filter at 0. This is like, oh my gosh, this is the best chart ever. And I haven't seen it. And I hope you agree that my system, if it was able to see it, would have been all over that thing. But alas, it wasn't, and it didn't. But I can do it now. If A equals R if you've got it, plus R if you don't, and you're looking for a risk. No complaints from me. That's a cracker. Let's go to George. CIA does look interesting, George. So I ran it. I reckon I ran it on this day here. Go check the chart watch. I'm pretty sure that day there was the first day I ran it. A bit of an aggressive one, but I felt, given the other iron ore stocks were running, deserved a bit of the benefit of the doubt. I also ran it on that day there. I'm pretty sure I ran it on that day there, and I'm also running it for tomorrow as well. So yes, to answer your question, or to respond to your statement there, it's looking interesting. Yes, I do believe it's looking interesting. I'm very happy here with plus R. Obviously, if you're looking for risk, and equals R if you already happen to have this one. A classic turnaround setup. Now, I know we didn't buy it here on this day. We did not buy it here on this day, probably because I was shorting it on those days. But we're getting in at $5 and not 4-ish. If you think that's a problem with my trading system, then don't use my trading system. Let's go to who's will say, be nice to have access to that Excel sheet, Carl. Oh, yeah. I don't know in practical terms how I could do that. But I do want to get the market index crew, because ultimately all of that chart watch, it's their intellectual property now, right? So it behooves them to transfer that database into something that readers can go and check when their stock last featured, or how many times it's featured, or even to backtest my strategy for themselves to feel more comfortable before they use it. So my goal is to get market index to build that into the page, but don't hold your breath. In the meantime, every Monday night, if you want to know something, let me know, or I can send you a screenshot. But it's just a spreadsheet on my computer at this point. Let's go to LDX, which is overlooked this. Did it not go into the regular list? I think it went into the regular list. Are you saying it wasn't in the shortlist? No, it didn't get shortlisted today because of that candle, and it's a pretty decisive point of supply there, and I just want to see a little bit of a dink into that level. And now you've got me thinking whether I actually did put it in tonight's regular list, and I'm going to check. Oh, no, you're right. I didn't put it in. Who's that? Robert. You're correct. Robert's caught me out. I definitely feel it deserves to be in the regular list, but it wouldn't have made feature tonight just because I want to see, and even if it's an intraday dink, Robert, and what, I'm sure you know what that looks like. An intraday dink would look something like this, and then it would get in. But that point of supply, I feel, is very powerful because you can see the convincing candle that was there, the follow through as well. I know it's done everything right. Everything else is right. We both know that. And maybe I'm being a little bit pedantic, but I'll explain why. And today's candle is good, but today's candle, move that to the side, could have been better, right? We both agree on that too. And even if it's just an intraday dink like that, even if it's that candle, so it sort of pulls back in the morning and then comes back, closes well, that would be enough to tell me that the supply that is active and nervous, latent supply in the system, has had at least had a crack at the demand side. The demand side said, no, we're strong. Because right now I feel that the demand side is still probing. It's still feeling out what is up here. And we got a little bit of an indication today. Just a little bit of a sneak peek into what might be there in that upper shadow. Okay. And I tell you what, if that closed on its high today, it actually probably would have got feature. Certainly would have been the regular list. But it's just kept it out. And it's not because I don't like everything else. That's not the case. I like everything else. But I just want to, even if it's just an intraday dink, make me happy on that one. Okay, let us go to Roscoe saying Google Docs. Okay, I'll try to do it. It'll be a Monday night only access thing, 100%. It won't go to everybody else, but I will try and do that for you. Let's go to the browser window. We're going to go back here. We're going to do all of these US stocks to finish us off for tonight. And the first one is going to be the cloud computing cohort of Shopify, which looks better than the ETF, doesn't it? And there could well be some currency conversion things going on, but I think that looks very good. I know there's a couple of candles at the end there that are far from ideal, but at the same time, what's that one there? Hold on. What's that? If I move that to the top. Haha. There I am. There we go. All right. That's why it wasn't working. Here I'm blaming the technology. It's partly my fault. Okay. This candle here and this candle here, they're much like the last two Nasdaq candles, aren't they? Let's zoom out. I want to see what's out the other side. And we're through, actually, isn't it? We're through. So last week we had a crack at it. We got through and then we found the supply. And that gets back to that last example as well of just sort of trying to deal with that supply. So I think we need to resolve that issue there on the daily chart of those last two supply side candles, not just reflecting what's happening on the Nasdaq, which we'd expect, but also reflecting that 180 is a pretty decent point of supply. Now, what does it mean for the cloud computing ETF? It actually means, look, this is fine. So this would get a pass on that basis that it's very supportive of you investing in the cloud ETF if you were that way inclined. Let's go to the next one, which is Snow. We're looking for red flags here, aren't we, Nicola? Snowflake. It is Snowflake. Oh, did I say Snowball? I mean Snowflake. Let's go to the weekly chart. And we do have a bit of history here. The next level would be 329. That's still miles away. And the next level after that's 405. But I don't think enough there to really worry us. And that looks very, very strong, doesn't it? So that's a big tick. If the other one was had a slight mark against it, that one's a big tick. And the next one is Zscaler, okay, which looks very good as well. So, Nicola, does that mean you rush out and buy the cloud computing ETF that trades on the ASX, or does that mean you rush out and buy those 3 stocks on your broking platform and treat them as 3 different trades? Or what you're going to put on the cloud ETF, divide that money into 3 parts and put them on this, or the top 5 or whatever. Don't know. I mean, look, the benefit of the ETF is it's all in one place. The benefit of doing the stocks is that if they go up, at least they're going to go up, because that cloud ETF doesn't seem to be totally reflecting the fortunes of those 3 charts. It could be because of currency conversions. It could be because of hedging, or it could be because some of the other ones in the many of their holdings aren't performing as well. So maybe you can do better than the ETF. Maybe you could get the list of stocks that they've put on their website and just go through those charts and buy the top 5 in a similar amount again that you've got a risk on that ETF. Or practical solutions, I think. Let's go to APG. Let's went to Jason now. APG, which is API Group. Oh, geez, that's a nice chart. How good's that? Well, that's the weekly chart, so we should get the periodicity right. Daily chart, I still like it. I don't like it. I like the weekly chart better, because on the weekly chart I can't see all these black candles, all of this indecision, all of these really programmed sell orders that actually got wiped out by probably some news. But I can't let that change my mind. I mean, that's far stronger, fewer black candles, I guess. But some upper shadows. It's still a yes. Look, it's not going to detract me from doing this. I still think that's a yes. The strength of that candle, we do have some positive price action, and the short-term trend will be up by the next candle or the next. And the long-term trend is a yes. So it's good. Look, it's a decent basing pattern for all of these black candles. Think of it this way: for all of those black candles, for all of that programmed on the day unanimous selling, because on so many days the demand side, all they could do is just limit the loss, really, isn't it? It actually didn't go down that far. For all of those down days, it didn't go down that far, and now it's going up. So that's fine with me. So let's go yes. Plus R, if you are looking for new risk, no need to wait. That's a fantastic candle, and equals R if you already have it. And we'll click save for next time. Your second one there is TRVI. Whoop. Escape that, undo that, escape that again, TRVI. Oh, no black candles there to worry about. That looks fantastic. Let's go to the weekly chart, which is even better again. I think this is the best chart I've seen all day. I didn't mean to go to the monthly, but we can see that it has broken to new highs. Happy coincidence. And I think this is the best chart I've seen all day, to be honest. Let's go plus R and equals R if you've got it. Very, very, very solid indeed. So we are getting better. Could the next one be better again? Let's go ECO. Okeanis Eco Tankers. I actually think it is better. Let's go. It's just so motive, isn't it? It's just there's just nothing holding this back, and nothing holding it back there, and it's just so clean. If there is one criticism, is that it's a little bit of a ways from the light green zone. Look, how long's a piece of string before you get some mean reversion? But it is a picture of demand side control, and the only time that would come into your mind is maybe I can find something equally as motive with candles equally as white, and it's just a bit closer to the short-term trend ribbon. But even then, it shouldn't dissuade you. I think that is now the best one tonight. BOTJ, Bank of the James Financial Corp. That's an interesting one. This one's not as good as the other ones, only because it's just a bit sketchy. We can see there's some crazy candles in there. So I would suggest not very liquid, which is causing some of that volatility. But otherwise, it's okay. If it's illiquid, doesn't mean you can't trade it. Just make sure everything else is right. But understand that you could get one trade that goes to 15.50, and then the next trade could be back at 17. Where this becomes more of an issue is if you're using stop losses in the system, okay? And you can just get tickled, and then it's straight back up. So imagine, on this day here, for example, I don't know, on this day you had a stop there, all right? So you looked at that big white candle, you got in on that day and you put your stop under there, and then you got stopped out literally 20 minutes later, a few thousand shares traded, and then it closed back on the high. That's where it becomes more important. Now, whether we're smarter than the average bear or stupider than the average bear, we don't use stop losses, do we? Not that we aren't absolutely consistent and disciplined in our risk management process, because we are that. I hope you are that. But we don't put our stops in the system for everybody to see and go and collect. Okay, we make our calls based upon the candles that we have, the evidence that we have. So it's a yes for me, but just keep in mind, illiquid. Save. Thank you for those, Jason. Brilliant, brilliant. Let's keep going. Palantir, PLT. Got to stop doing that. PLTR. And yeah, look, I wouldn't say it didn't give you a few nervous moments. I mean, managing risk here, I reckon taking 2R off the table there probably. Don't think it gave you a real reason to do the final. So you would have kept a third and probably started adding it back here, maybe, certainly there, definitely there. This is all much for muches through here. Lower shadows didn't close at all. Even on that day, you could say, oh, you closed beneath the short-term trend line, but it was a big lower shadow. And then even adding risk there, but probably not adding risk into 200, taking some money off the table here. So you're saying in May, I said it could go to 200. Yep. Yeah, I mean, that's what people are thinking in America. That's how their brains work, you know. And if I said it on that day there, that's May. That's the way they think. It's 130. Their minds are going, 200 is where I want to get out. I want to withhold my supply until I get to 200. Let's go, but no, we can't look at that as a $130 stock and say, oh, that's too much or it's expensive. I'll try and find something in the 40s or the 20s. That's just not how trading works for us. Just looking up the list, we've got DSV on the Toronto Stock Exchange. This one is for Peter. And there we go, Discovery Silver Corp. Now, this will be interesting because we know silver's having some problems. Not here, though. This one is kind of anticipating a bit of a silver recovery, or it just doesn't care. And taking it just on face value, what we can see, yes, it looks very, very strong. We're seeing a bit of a test of this point of supply in this candle here. So all I need is another demand side candle. Obviously, Friday's candle isn't it, but that's all I'm waiting for. If I have it, then there's no question. I must be maintaining the risk I have. If I don't have it, then I'm just looking for the next demand side candle to add that risk. Any demand side candle will do. So happy with that one. Looking up the list, that's why I'm pausing, reading all your comments again. And I'll look at, while I'm here for you, Peter, because you did ask that follow-up question regarding Bitcoin. Let me just have another look, because you gave me a number, 106. So, yeah, for me, this candle is still live. Okay, so here's the thing. Let me get rid of this. So when I said you could just short it here, when we looked at it before, that candle was a full black candle, wasn't it? Okay, so no, we can't look at that candle and say anything till it's closed. But let me say, if this candle closes beneath the long-term trend ribbon and it's within 5% of its low of the session, then I feel you don't need to wait. Well, it's about 6 anyway, isn't it? So you are actually more accurate than me, which means I'm glad I followed this up so I could clarify. I want to see a full black candle closing beneath that long-term trend ribbon, and then I wouldn't wait for that dink that I discussed before. That dink would be confirmation. I'd probably be adding my final third by then. So it's an aggressive setup. I know it's Bitcoin. I know it's aggressive. And if I get taken out, I've got nobody to blame but myself. Okay. Next one is going to be Adonis, who has his US stocks for us this evening. FSLR, First Solar. Oh, wow, that looks great. Let's go to default zoom. Even better now because we can see it's taken out that point of supply. We'll go to the weekly chart, see if there's anything after that one. There is. and it's at 300. So that would be the only problem there is, look, it's a pretty decent number as well, is at 300. And we know, not only is it decent, it completely stopped it last time. Everybody was waiting to take profits at 300 for some reason. So that's the monthly chart. I didn't mean to go there. But now we can see that there's another level there. And I didn't mean to do that because that's the recent one at 300. I know this is ancient history and I didn't mean to go there, but you can see it's done it before, back in the GFC. So that explains that 300. Here I'm going, well, 300 isn't ordinarily a really round number. Nobody's going, well, please God, let this go to $300, right? But now that accident means that 300 there makes sense with that 300. So a happy accident, because it means that as good as this looks right now, we probably want to pay that 300 level a bit of respect. So how do we trade it then? Do we not trade it? Because that is an amazing setup. Like, hands down, any other time, if I didn't know 300 was a bit of an issue, I'm all over this one. Because 300 isn't a typical round number. So I'm going to go yes. But we go into these things eyes wide open, right? It's not going to be a surprise for us. And we know now that we have to be absolutely vigilant with the price action at 300. And I think that's all we need to do, because everything else is perfect here. So why wouldn't we put some risk on it and just go into it eyes wide open for me? Adonis, agree? I think you're about to turn your mic on there. He agrees. Let's go to the next one. AMZN. That was a very strong setup. Let's check this one out. Oh, big gap. And I know that looks like a big black candle, but it's not really, because there's a big gap there. And so this is white, and then that's actually, for me, more like an upper shadow, if anything. So that's very strong. Obviously, it stopped at 250, no surprise there. If we go out to the weekly chart, there's nothing there. I'm not going to go any further. So it's all pretty good. And yeah, I don't mind. The only thing would be just maybe waiting for one demand side, and it doesn't have to be a big one, but just anything that closes white near its high, that's all. I don't think it's going to run away, just on that close there. I don't think it's going to just bolt away today. I think this is more in the category of a few days, like, a few days, a week or something, and then, consolidating and then go again. So I don't think if I said equals R, obviously that goes without saying, but if I said plus R on the next demand side candle, I don't think that's really causing us to wait too long, is it? That's the way I would trade that one. But looks good to me. And then if we go TEL, keep doing that, undo that, TEL, which is TE Connectivity. Oh, amazing, fantastic, brilliant. Can't fault it. Nothing out there either. It looks even better on the weekly chart. And yep, really, really great setups in the US, everybody. So congratulations on that. Of course, none of us know where they're going to go next. But we all know that, don't we? So great setups. Well done. One more. ROC. ROCK in the USA. Oh, for a short, perhaps, Adonis. I'm guessing you're asking this one. I know you're not asking it for a long. Waiting for a thumbs up just to confirm, or if I've got the wrong one, perhaps. And ROC. So it's the wrong one. Okay, what should it be? Oh, okay, what's the code? Oh, we can. ROK. Yeah, no C. Yeah, that makes more sense. Well, the other one for a short might have looked okay, but no, that one makes more sense. Let's go weekly chart. It looks right. Looks really good. So, yeah, that's in keeping with the other ones. A little bit of an upper shadow there. 370 is irrelevant. 400 is not that relevant either when you get into these numbers. 500 I would definitely heed, but this is all much for much. There's a little bit of supply here. I don't know why some traders have picked 370 as their number. I would expect it to wash through. It does mean, though, that still waiting for a demand side candle, maybe one that closes close to the top of that shadow there where the supply is lurking, to tell us that we've worked through it. Certainly equals R, and happy with the plus R, but I think I just want to see another demand side candle, the next demand side candle. But very, very strong on everything else. I'll just scroll down, make sure I haven't missed anything. Matt's got GGAL to finish us off. And that looks good too. Yeah, happy with that. Obviously more of a turnaround setup. It hasn't really pulled back to test and hold, and I don't think it will. I mean, there's a bit of an intraday dink there and a little intraday there, but no, happy to go. Just watching, however, there's going to be a bit of supply in here. I mean, that's a supply zone, and even sort of in there's supply as well. So just checking the reward to risk. So I don't have any problem with the setup. It's a turnaround setup. Happy with that, but I would compare the reward to risk on this trade, because where do you put your, like, you know, if it goes, you know, sort of nothing candle, and it's like candles that don't scream supply side control but are still pulling back, you know, lower shadow. Like, where's the point you peg that you're going to say, well, this is where I have to manage risk? Like, I've got no choice. It's beneath that point of demand, even though the candles aren't too right. You can't. The last trough is down here. So, you know, if that's your trough and that's your entry, then you're clearly not making it. So what it forces you to do, it doesn't mean you can't do it, but you've got to be disciplined then to say, well, if it gets beneath that candle low, because that's where there was a huge amount of demand, if we've consumed that demand, it's not there, then I'm concerned, and that's where I'll take myself out, so that I'm not putting myself in a situation where I'm going to be potentially risking more than I stand to make. So these are just considerations, that's all. But otherwise, I could go on that. Personally, I wouldn't, but I can see why you might want to explore this as a possibility. Okay, let's head over to the PowerPoint and finish this off. Just remind everybody that everything we've discussed is general advice. I know, I say we have to do this, we must do this. We know what we mean, don't we? Based upon the model that we're all following. That's what the model tells us to do. It's your money. You're responsible for it, not me, of course. Apart from that, as always, it's been a pleasure chatting with you this evening. Hopefully you enjoyed it. I did. I always do. And hopefully we'll catch up again next Monday. All the best for your trading and investing. Until then, bye-bye for now.